Welcome to Alpha Bytes, where each week you get a behind the scenes peek into crypto researchers doing the dirty work to find tomorrow's alpha. I'm your host, Marconi White. Today's show is so hot, it's got to be seen to be believed. I'm going to ask the guys if buying Link today is like buying Ethereum at $9. But first, the Dixie and bonds are signaling the market may have just pulled a historic fake out. We're going to answer the question whether SBF's FTX was the biggest Ponzi in history. King Cody likes or spikes 3 projects, including Lido's dominance spooking the ETH community, Star Arena suffering a devastating attack, and SocialFi emerges as a new crypto trend. And hey, we may just cover a little bit more. I've got Ben Lilly, JJ Ray, and Cody in the studio. Gentlemen, welcome. I know you can see their faces with our very first video show. So, for all those loyal listeners out there that have been hearing for the last 10 episodes, we were finally going to do video. Well, we finally delivered. And hey, we want to know what you think. So in the comments, tell us, what do you think? What do you like about the show? What do you like about the visuals? What do you like about our faces? There's not so much that we can do about that. This is what we were born with, but we'll see what we can do on the other parts. But we got a lot to cover today, just like we do every week. So we're going to jump into the market update with JJ. I'm going to kick it off with you. You know, just 2 weeks ago, the bears threatened to just tank the market. Since then, BTC ripped above 28K and it appears to be staying stronger while the Dixie maybe resets. Where are we headed next? Help us sort this out, JJ.
Yeah, so that escalated quickly following last week's bond market sell-off and all the turmoil we were seeing in legacy markets. It appears that the terminal rate finally topped, and we can see that as measured by the September 2024 Fed's futures contracts, which bottomed last week. So there's an inverse correlation here between the terminal rate and these Fed futures contracts. And when these rise, it indicates decreased market expectation of the Fed's ability to continue hiking and ultimately results in a weaker dollar. So what that resulted in last week after these Fed futures started to rise was DXY having its first down week since mid-July, when it began this incredible 11-week uptrend. Pivotal next 2 days ahead for DXY, with catalyst events such as PPI and FOMC minutes tomorrow, followed by Jobless Claims and CPI Thursday. These are always events that move the market in pretty measurable ways. If DXY were to move back above 106.50 from here, it would be a pretty clear risk-off signal, especially if that coincides with the terminal rate rising again. If the sell-off continues, however, areas of interest to watch the downside for DXY are 105.10, which is its 9-close-0 SMA5 trend line. That's a trend line it's held since late July when it began this up move. And then there's also the 50-day MA at 104.50 and the 200-day MA at 103.18. If either of those should fail, or all three, then we could possibly see BTC respond with a surge over 28,000, especially if DXY were to somehow fall. It's very unlikely, but if it were to fall below its 200-day, then I think we could possibly consider the ability of BTC to move back above 30K and into new year-to-date highs. But a lot of things have to happen in order for that to come to fruition. It's very much a level situation. And you want to avoid taking risks on BTC until you get that clear signal from DXY that, hey, the top is in for now and we're in a new downtrend is beginning.
What you just mentioned with some of the trends, some of the other data points that are coming out, what's your expectation? Or are you even, are you reading some signals there that may give you an idea of where Dixie may be headed next?
It's hard to say for sure. You just have to kind of trade on a day-to-day basis. We kind of finally see a cap on this rally. And what we're looking for here, a move back above 106.20 for DXY would be a pretty strong risk-off signal, especially if that coincides with the terminal rate rising again. If the sell-off continues, however, some areas of interest to the downside for DXY would be around 105.10, and that's a measure of its 9-close-0 SMA5, a trend line, which it's held since late July when it broke out of the downtrend, and then also 104.50, its 50-day moving average, and 103.18, its 200-day moving average. So those are the 2 or 3 main areas that I'm looking at if DXY does continue to go down from here. And reason being that if it does go down, I think we could see BTC respond with a move back over 28,000. But what would have to happen first in my mind is losing that 105 region for that to happen. Then if it loses the 200-day over the next few weeks, we could potentially see BTC reclaim 30K, but that's still a ways away. This is just kind of forward projecting, in terms of BTC exclusively, we've seen it kind of continue to consolidate in this 27,000 range. So typically a bullish development, but that said, it is below major resistance at 28,000. Market has had countless reasons to sell off over the past few weeks, and it hasn't yet. That doesn't mean that it won't. It just means that it hasn't yet. So something to keep an eye on. It's retested that 200-day moving average around 28,000 multiple times and failed. So I'm kind of the mind that the more resistance is tested, the weaker it gets. So I wouldn't be surprised to see BTC make a macro move over that, but it would have to coincide with either a spot ETF or a sliding DXY based on some kind of potentially bullish catalyst there. Without either of those things, it'll be very difficult for that to happen.
Okay. Can you expand on the options market and what that could mean? Because I know there was some interesting activity. I think you had some a post here from Kelly Greer that was talking about that. Can you explain it for those who are maybe a little confused on what's happening in the options market and what that may actually mean for price?
Yeah. So since Bitcoin broke over 30,000, especially over the past few months, we've seen a lot of selling of upside volatility on BTC. This is coinciding with low spot volumes. So what's happening now is they're kind of collecting this as yield, right? You sell these options for premium and then they expire worthless. You get to keep all of the premium. And they've been able to keep price in this suppressed range, benefiting the option sellers. So that's also coinciding with these low spot volumes. If all of a sudden there's a catalyst that brings price above, say, 28,000 to 30,000 or so, all of those options, the out of the money options that have been sold over recent months, they would have to cover their positions. The way you cover your position and hedge yourself so you don't lose money past a certain point is you have to buy the spot Bitcoin itself. In Kelly's tweet there, she mentioned that it would be around the range of approximately 100 million in BTC buys would happen with a move through 30,000, and over 400 million in BTC buys would happen with a move through 35,000. So in a market that's been this low volume in terms of spot, that kind of buying pressure can really influence price a lot, and we could potentially see a blow off top here in Q4 if that manifests. That's obviously a big hurdle to get through. The 28,000 range would be the first wall that needs to fall there.
Okay, so selling the vol is a really good bet until we have that volatility, and then all of a sudden you're caught off the wrong side and you're forced to buy.
Yep. Yeah, that's the story of the GameStop saga essentially. So this could be that on a much smaller scale, but still interesting nonetheless and something to keep an eye on.
Okay. Ben, I want to bring you in here. We were just talking about the Dixie more from a macro perspective, and some of the figures that are going to be coming out this week and next. What's your perspective, if at all, if it differs or if it's similar to what JJ just shared from a Dixie and just a macro perspective?
Yeah, definitely. And so on the weekly DXY chart, it's kind of nice to finally see that a red candle show up, and I believe a lot of that has to do with just that strong move we've seen on some of those yields, especially the 10 to 20 to 30 year. We've been anticipating it at least here for quite some time, kind of those long term treasuries catching up to the short term as they try to normalize the curve and as they expand treasury issuance in terms of the longer duration as they start to approach kind of terminal rates. But I don't think the move is over quite yet with a lot of these yields. And I think there's a lot of question marks in the market of why is this happening at the rate at which it's happening. And I think just a lot of it just has to do with, look, it's been so dislocated for so long. We're getting closer to terminal rates, and this normalization process is happening rather quickly. And I don't think it's not entirely unexpected, but it provides a lot of commentary, if anything. So I don't think this DXY move I don't necessarily think it's over quite yet.
The sell-off isn't quite over yet.
I think the sell-off is warranted on a near-term basis, but on a long-term basis, I don't think the DXY strength that we've been seeing is over.
Okay, and I think you've been active on Twitter asking the question: is this really a sell-off on treasuries and bonds? Right, because there seems to be there's a sky falling kind of view out there, and I think you've pushed back on that a little bit. Is that a fair statement?
It is, and there's a stat. It's the cover to bid ratio that happens on treasury auctions, and it really kind of highlights how much demand there are for treasuries in general. And when there's a covered a bid that's over, say, 2.5, that's telling the market that there is still strong demand at that maturity. And we've seen good numbers really across the board. And it doesn't really indicate that a sell off's happening. If anything, it's just an increased supply and issuance of debt at those terms. And so it's just whatever happens in terms of if there's more supply hitting the market, you will have higher yields that happen and unfold, and that's just what we're seeing take place. And the Treasury signaled this that they'll be doing this a month ago, so this shouldn't come as too much of a surprise. Yet it is a surprise. It seems like.
Right. It does seem to be catching a few people off guard, or perhaps they're using it to gain a little bit of attention on X and Twitter, because that never happens. Ray, I want to bring you up here. Is there anything from your perspective you've heard that you think maybe hasn't been mentioned that you think is relevant to the discussion, either from a crypto or US dollar perspective?
For Bitcoin, I could say that the weekly CM Super Guppy is getting super tight and it's flipped green, and it's a multiple moving average indicator. So basically, it's comprised of short term and long term moving averages. And when the short term group of averages moves higher, when those lines or those colors that represent the short term moving averages, when they move higher and above the longer term group, it indicates a price uptrend and the asset that could be emerging. So that's what we're seeing now. It's turned kind of dark green. And the entire ribbon, because it looks like a ribbon or like a rainbow ribbon, it's beginning to constrict and then it's beginning to twist, where you see shorter term moving averages moving over the longer term moving averages. So on the weekly time frame, it could just be a sign of improving momentum within Bitcoin price. But on the flip side, another indicator that I use on the weekly is called the whole moving average. And on the weekly, it still shows a red ribbon overhead at 29.5K. And this level, 29.5K all the way to 30K, has remained a point of resistance. So for Bitcoin, I'm not yet seeing the confluence among indicators like Bollinger Bands, Super Guppy, HMA, RSI, MACD, and trading volume that would make me want to trade this chop while price is kind of gravitating within the middle of its multi-month range. But like Ben and JJ alluded to, CPI is coming. Oil prices recently hit a yearly high. High oil, I believe, contributes to other components of CPI and inflation measurement. Plus, you've got Russia and Ukraine still going at it, and without the House having a speaker right now, and Ukraine funding from the US, giving them money for weapons now being at risk, we could see Russia make a more concerted play to take back some of the territory that they've lost there. I think that Russia can exert stronger geopolitical influence now, knowing that Ukraine funding or sentiment for Ukraine funding from the US lawmaker side has come under duress, and Russia's already inserting itself into the Israel and Hamas thing. We know that Russia's aligned with China and with Iran economically, so they can exert some pressure if the U.S. and Western countries start to go after Iran for their involvement
Right.
in the Hamas attack on Israel. So I
I'd like
think there's
to
unexpected volatility, which could impact investor sentiment and risk assets. For now, for
Okay.
Bitcoin, 24.5K to 30K remains the range.
Right. I was
Can I
going to
jump
add,
in here
yes.
real quick, Marconi, just to add
Yeah.
in a
Yeah,
data
Ben.
point that kind of summarizes, I think, a lot of what Ray's saying and some of the near term, maybe a little softness on the DXY, but why might we see a little bit of strength? There's the geopolitical events that causes the congestion in supply chains. And I think a lot of this is starting to show up in the data. Like the IMF is now reducing its growth outlooks in terms of GDP around the globe. And then it's also upticking its expectation for inflation. I think it was this morning they released it. So a lot of these data points are now starting to hint at like, look, it's not quite over, but we haven't really seen those data points start to move into the markets as of yet.
Okay. So I think there's still a note of caution here for those who are expecting maybe for inflation to be resolved and for maybe the Dixie to just drop like a stone at this moment. There's plenty of reasons for you to remain cautious about where to place your bets right now. JJ, I just want to come back to you. Is there anything that you would want to share, sort of a parting comment on where you're looking?
No, keep an eye on those federal funds futures because I think ultimately they'll be what's driving the price of Dixie. So if we start to see those, if we see the federal funds future drop, that means the terminal rate's rising again. I think that would coincide with Dixie blowing off to higher highs. However, if they continue to rise and that indicates a lower terminal rate, I think we can expect Dixie to soften as kind of all these variety of effects on the market are taking place, and we could see kind of the Fed be forced to ease into a weaker dollar for any number of reasons. So just keep an eye on the way that they react in light of this week's data points coming out, especially
Okay.
tomorrow's FOMC minutes.
All right. Well, a lot of good analysis there. And as I said, it's just a continued note of caution. This is a weird time in the markets, real weird time in the world. All right. With that, we're going to move on to the next segment, the beta play. Excited to get into this one today. This one's going to be a little bit unique. For those returning listeners, we've now done several of these. This is our 5th installment of the beta play. And what it is we analyze market opportunities and we ask the question, will this outperform the benchmark in the coming cycle? And the way we're doing this is by evaluating 3 category areas: network strength, monetary fundamentals, and technical analysis. And after we review the data, I'm going to ask the team whether they expect the play to outperform. For today, the benchmark is Ethereum, and we're asking if Chainlink will be the beta play. Now, Cody, who's here, is going to do a deep dive into the platform. But before we do, just let me set this up a little bit. Chainlink describes itself as the decentralized computing platform powering the verifiable web. Yes, we're in crypto, so there's always a lot of jargon. Let's just break down what that means. The network combines on-chain data and off-chain data by offering tools for linking oracles to smart contracts. So what are oracles? Well, at its core, an oracle is a data feed that a smart contract can rely on and act on, providing a stock price or even something about weather. So for Chainlink, the native token for the network is Link, and it's used to pay for accessing oracles and other use cases. So that's enough for me. Cody, I want to turn it over to you to go through the network strength. Take it away. Oh, Cody, you there?
Yeah, as you said,
Perfect. All right.
yeah. So as you said, Chainlink is a network of oracles. Well, it's a network of node operators, sorry. And these node operators are decentralized and they get data from off-chain sources and deliver it on-chain to smart contracts. They can also process computation off-chain. They have a reputation system. That means that like the different networks of nodes have a reputation according to how well they have delivered the data that can be used by the smart contracts on chain to like favor certain nodes above others. And they're also blockchain agnostic. That means that the Chainlink can be used throughout or can be used by any chain and any smart contract on any chain that wants to do so. That has allowed the Chainlink to become by far the most dominant oracle in DeFi. And I think we can see this if we look at the yeah, I think we're gonna see it now. If you look at the TVS, it is by far the one with the highest one. What is TVS? Yeah. I'm gonna explain. Yeah. So same as for DeFi, we have TVL, that is the total value locked in a smart contract. For oracles, we have total value secured. That is the total amount of TVL on smart contracts that the oracles quote unquote secure. That is like they provide data so that those smart contracts can act in the way they are supposed to. So say Chainlink provides data feeds for the price of gold provides data feeds for what else could it provide? Like any off-chain data that it provides data for. If a smart contract is using it, that would count. The TVL of that contract would count as the TVS or total value secured by Chainlink. And as we can see in this chart by the gamma, it grew up to 60 billion during the bull market. It's now down to just below 12 billion, but it's still the oracle with the highest TVS. if we look at the progression on the next image, we see that it wasn't the most used in the beginning. The most used was Chronicle, which is an oracle used up until very recently just by MakerDAO, and they used this oracle to for the MakerDAO and DAI smart contracts, and it started being, as you can see, the well, basically the only oracle in DeFi, and then Chainlink appeared and started gaining ground. Now, yeah, yeah, I was gonna say. So Chainlink is the blue at the bottom. Then we have Chronicle is the red, well, dark red, and then we have a few others. The purple that has been gaining ground quite recently is Winklink. That's the oracle that is used in Tron chain by Justland and Just Tables. These are the DeFi protocols in the Tron ecosystem. And also, I don't know which color it is now, but Pith by it's one project by Solana, or on Solana mainly, that has also been gaining ground recently. But yeah, they are not as big. So Chainlink but secure right now, as I said, 12 billion TVS, Winglink 6 billion, but as I said, only on Tron ecosystem by two protocols. Chronicle 4.5 billion, mainly on MakerDAO, although it just opened. So other protocols can start using them. There's only one for now, Keeper, that uses it, but I think in the future that will change. And then Pith is the next one by number of protocols, and it's used mainly in Solana, but also on other protocols across DeFi like Synthetics, Venus Protocol, etc. Now,
Yeah, so I want to jump in here. Do you see any advantage from a technical perspective why an oracle would want to be specific to only one chain? So if it's just for Solana or just for Ethereum, because as you mentioned, Link and Chainlink is chain agnostic; it cuts across all of them. Is there any reason that there be a benefit to only be for one chain?
Well, this is not my area of expertise. I do know that Pith started forking Solana, and it is my understanding that they might be running a forked Solana on the side, and that could give some advantages. But I don't necessarily see why the oracle that like is most widely used, like in this case Chainlink, why they should concern themselves with just one chain. Like they have a sort of chain that is a decentralized like network of nodes sitting on their own quote unquote chain powered by Link, and they I don't know, I don't see any point in like only focusing on one chain. And as we see, Pith started on Solana, but then it quickly started providing data feeds to other chains.
Gotcha. Okay.
Do
So what
have to
else
say,
should it? I was going to say, what else should an investor be thinking about from a technical or network strength perspective?
there's not much to say. There's not that much data that we can get on Chainlink itself. But to be honest, right now it's the the only solution, or like not the only solution, but like it's the main solution that you should look into when looking at oracles. Pith, you have even less data on. It's quite like, as most projects on Solana, unfortunately, it's quite closed. Winklink, it's just used by Tron. Anything that comes from there is quite obscure, and again, we don't have much data on. And Chronicle, they just open for the wider ecosystem to use, and again, there's not that much data. There's only one project aside from MakerDAO using it right now, although that will probably change in the future, but for now, yeah, that is the case. So I think if you want to bet on an oracle right now, it mm, has to be Link. Also, like these other protocols that don't even have a token, so there's no way to bet on them. So unless you get like unless you get like an OTC, like for Pith, I know that there was quite a lot of people trying to get in because when it launched, it was seen as like a really good competitor to Chainlink, but you would need to get like in a round when they're getting funding, or you would need to buy it from someone else that has invested in
Okay.
a private round.
the VC route, which
Yeah,
is not easy to do. Okay.
it's not.
All right. So to sum it up here, Chainlink, it really has an advantage. Definitely not first mover advantage because they weren't the first on the scene, but they
Mhm.
clearly own a dominant player in the marketplace.
Yeah.
And definitely the one to
Uh,
keep an eye on if this is a space you want to be looking at investing in.
Yeah, and there's something in the pipeline that can take it even one step above every other oracle. They have this CCIP, that's cross-chain interoperability protocol, and that would be it would turn or link into not only an oracle but a sort of bridge, um, because this CCIP would enable transfer of data and tokens between smart contracts and blockchains and accounts, basically for all blockchains, just as they are blockchain agnostic when it comes to being an oracle. They would enable bridging between all different chains. So you would be able to send tokens, send any message that you want from one chain to another, and that would enable all sorts of things as like cross-chain lending and borrowing, offloading computation to low-cost chains. For instance, like you would have a smart contract sitting on Ethereum, and then you would have another smart contract running the computation on, say, Solana. Like it doesn't really matter if it's an EVM or not. I guess with CCIP, you would be able to optimize yield from different chains, cross-chain dApps, bridging. Like it would probably be, if they do this right, it would probably become not just the most successful oracle, but also the most successful bridge.
Hmm. I'm putting up my spider senses here and thinking about the risk. Do they have the security robustness to really defend if they're going to be the most successful bridge, given the hacks that have happened in the past?
Yeah, I guess we have to wait and see. They've been talking about CCP for a while. I guess they also want to get this right. There's only one major bridge left, that would be Stargate. It's the only one that hasn't been hacked. All other bridges that by volume are the like one-way bridges, or like the Arbitrum bridge, when it comes
Mhm.
to bridging from Ethereum to Arbitrum, the zk bridge, but all other like general bridges have been hacked at some point, aside from Stargate. That's just like the one man left standing. So yeah,
Yeah.
I
Yeah.
hope they do it right,
All right.
but yeah,
At this point, it's kind of speculation until we actually see it implemented and it's out in the wild. But
yeah,
sounds like a
absolutely.
big promise if they can get it right.
Yep. In
Okay.
a sense, this would be like IVC in Cosmos, that inter-blockchain
Mhm.
communication. That just it doesn't really put assets at risk necessarily. There's no there's no assumption of risk. You just like send data from one chain to another. Um, so if they can do something like that, but for the wider ecosystem, that would be insane. Like that would put them just above any other DeFi protocol or bridge or anything. But as you said, we still need to wait and see if they deliver.
Okay. Well, and with that, I think that's a good point to transition into monetary strategy, because we'll talk a little bit more about how the token link is going to be used, and then relate that back to price. So, Ben, I want to bring you up here. You want to walk us through what we have from a monetary strategy perspective?
Sure thing. I'll do my best here. And there is definitely a lot to look forward to on CCIP. I was diving into that some more this week, and it's some incredible tech. So I hope they're successful, and because it's going to really help the broader ecosystem as well. But getting into monetary discussions when it comes to Link, there's a lot to like here. Like I won't beat around the bush. I think there's a lot of positives. And with that, I'll actually just get into the negatives first to sort of get that out of the way. And I do think the negatives are a bit overblown at times on crypto Twitter. And I'll just like to quickly say that I think it's a result in terms of how overblown it is, due to the strong community of Link Marines who honestly, they can be a bit obnoxious at times. And for that reason, I didn't really look forward to the breakdown of Chainlink for that reason. Um, the way that I kind of view it is it's easy to love, support, and cheer on a humble person versus somebody who's constantly going around and telling everybody that they're the best and to look at them. So I think it's just something to bear in mind. It's something we can all relate to, and just keep it in mind moving forward. Because I think Chainlink, there's a lot to like here, but let's just try to stay as humble as possible because we're trying to overturn a Web 2 and essentially a COBOL Wall Street financial ecosystem that's like 60, 70 years old. So let's take it one step at a time. So anyways, Link. So let's start off with the token supply. I'm seeing a lot of different stats mentioned across data providers. CoinGecko, for instance, shows the full 1 billion Link in circulation as of January 2020. Dune says a similar supply is out there. It's a little bit different in terms of when that supply hit. DeFi Llama, on the other hand, suggests the entire supply is not quite in circulation. And about 300 million is still getting unlocked ad hoc by the Chainlink team themselves. And they also mentioned that some of their unlocks, they extrapolate into the future as to when those might be happening with the Chainlink team. And so I really just say this just to hit on the fact that these locks or unlocks, they're not crystal clear. And for such a big project, these discrepancies are surprising. There really is a need for a better disclosure system. Even our internal allocation schedules, we had something else as well. So nobody's perfect here. We're all trying to do our best in terms of getting the accurate data. And we have teams look. Yeah, come on in.
Let me break in here. Just at a more meta perspective, this is something that just is shocking, right? I mean, you have crypto is supposed to be about verifiable information. You can go look at a chain and say, what's the total supply? What transactions have happened, etc. Here, we're still having issues being able to get an accurate depiction, assessment, and accounting of the tokens that are in supply. What's your perspective on why this isn't being solved, especially by something like Chainlink? Seems it's right up their alley.
Yeah, so on Twitter, Gabriel Shapiro, I think he goes by @Lex_node. About a year ago, he really discussed how there should be this disclosure requirement that the SEC were to pursue. And what that would mean is teams and projects, whether you're decentralized or centralized, would go ahead and fill out these disclosure forms. So there's just a better understanding of what people should be looking at, what to expect, what are the token supplies, what are the unlocks, what's the vesting schedule. And right now we're all just trying to weed through this endless mountains of data, and a lot of changes happen in a Discord, for instance, or just a quick tweet on Twitter, and this completely changes how tokens might be relocked, for instance, and they have a new vesting apply to those locked tokens. And it's like, somebody who's trying to pull that data up, like, how are they supposed to catch all of these different things? And so if somebody's in a community, like, they're like, yeah, it's so obvious. This is it. This is the source of truth. It's right here. I told you so. And for the Link Marines, like, I'm really curious, what is the source of truth here? But I think for the broader ecosystem, it just showcases, like, getting this accurate vesting schedules. Like, internally, we have over 200 different allocation tables internally, but we understand all the discrepancies, so we're not going to just put it out there for that reason.
Right.
So there's definitely a big need in the market for better disclosure systems.
Something to consider, and I would say for all those listeners who are out there, if you see a bit of information, always put on that critical hat, knowing exactly what Ben just mentioned, that the information isn't always readily available. So, all right, continue on with your analysis here. Sorry for the detour.
No worries. And so regardless of those facts, I'm kind of assuming here that there were some unlocks that took place by Chainlink Foundation or the company themselves at the end of 2022. Around the same time, they started to implement version 0.1 for their staking, because they're starting to roll this out into Chainlink broader ecosystem. And as they rolled that out, the amount of tokens that got staked up sort of washed out all the unlocks that were taking place. So that was kind of well thought out, if you will. And there might be more unlocks that might have happened. If that's the case, we can kind of chalk that up to why Link kind of missed out on the early 2023 run up that the broader ecosystem witnessed, but I don't think it's something that should be really harped on too much. I don't think it's terrible. So when you think about where the token actually is in terms of usage, there's about 50 million Link that sit on centralized exchanges, which is actually a pretty small number. If there's a billion in total supply, and Bitcoin, for reference, has about 1.8 million of its tokens on centralized exchanges. So compared to the total supply of Bitcoin, you can see that Chainlink is in a little bit better situation. The amount of Link that's sitting on decentralized applications, layer ones and layer two, if we can put that chart up on the studio, so those that are watching can take a look. We got about 24 million sitting on these different areas of the ecosystem. This chart's 2 months old. I think Dune is trying to wind down some of their dashboards for costs given the current market conditions. So this shouldn't be too different from what you see right now versus what it actually is. And then I mentioned that they rolled out staking. There's 22.5 million over there. So right off the bat, when we take into consideration all these different buckets of supply, that's about 10%. So it's pretty good usage across the board. Credit markets, there's some surprises here. This one kind of got me digging a little bit further because I found some outlier statistics. We'll get into that in just a moment. But as far as staking, people holding Link, it's about 5%. So I expect this to be a very popular alternative in the market when they reopen this back up to the broader market. So right now they kind of hit the full supply that they're willing to be staked. And then when they roll out version 0.2 of staking, more tokens will get staked. The lending and borrowing markets are pretty dry. Aave V3, for instance, which has a lot of the Link tokens sitting over there, they're giving out about 0.02% on the 2.7 million Links sitting over there. So I expect to see, that's part why I see a lot of tokens that will be allocated towards staking go ahead and take part in it once V0.2 rolls out. Bancor, they're offering about 0.5%. Same thing with Compound. So there's not much yield over there. But when you actually pull up Uniswap V3, in particular the linked wrapped ETH market, the yield is considerably high. So right here, this is a DeFi Llama's chart. We got similar stats as well, just over 50% yield sitting over in that liquidity pool, which is pretty eye-popping.
Yeah,
so
that's really eye-popping. Have you seen any other pools with the similar yields?
On V3, they're up there. On Arbitrum, we kind of see a similar amount. But if you see a yield like this, then you have to be asking yourself, why don't we see more demand on the borrowing side if there's so much supply sitting over there on Compound and Aave for the market to go ahead and arbitrage this yield out? And the reason being is, with V3, you really have to be a sophisticated market maker to be able to get that sort of yield. Like if you're just kind of a lazy yield provider, you're not going to be earning that yield. So we need to get that expectation clear, right? If you're going to go over to Uniswap V2, which is much friendlier to the lazy liquidity providers who just want to go ahead, lock up their tokens and earn a yield and kind of go on with their life, they're earning 2.3% yield at the moment. So you can see that's a big difference. And a lot of it has to do with the way that they do concentrated liquidity over on V3. So regardless, 2.3% on V2 is still pretty good for the current conditions in the market. So to me, this alludes to the fact that the on-chain activity with Link is actually pretty good and should not be ignored. Because you don't really see these yields elsewhere in the market at the moment. And I believe that is alluding to a good future for Link, especially when we take into consideration some of the fees that it's starting to earn.
Okay. So yeah, I guess kind of a little bit of a it's a positive message with a little bit of eye-popping numbers there at that 54%. So I think the next thing you have here is net economic output. I want to hear more about that.
Yeah, so Chainlink, we kind of hit hit on CCIP, that it's starting to be rolled out. A lot of the fees that we're seeing on data providers are showing fees only going back a few months. I have to think that the reason being is having to do with CCIP here. But if we were go ahead and annualize the amount of fees that we've seen, Chainlink, go ahead and there we go. We just got the chart up. If we annualize that out, not the token terminal chart, which I provided the producers with, but if DeFi Llama has it as well, it's 2 million, which is solid. I mean, it might seem pretty small, and I personally doubt there's more than 50 projects in crypto right now that have annualized revenue in the 7 figures right now. So the fact that Chainlink is doing this right now, I think that's a really good indication of where it's going. And as CCIP rolls out further, I would only expect these fees to continue to expand, a very
And
positive
then
flywheel.
these fees, is this exactly for providing a data service, or are there other fees that could be part of this? How is this revenue generated?
Yeah, so Chainlink, Oracle providers, you can go ahead and get these data feeds on price, for instance, and you'll go ahead and pay those providers with the Link token itself. So that's sort of the lowest form of utility for a token, is being used for payments. And then as we go up further on the ladder of kind of higher forms of usage for a token, we have staking here with Link, and they're starting to roll that out, which would really, that's good for a token's ability to be able to absorb future supplies or any downturns in the market. And they're going to expanding that usage moving forward. And then the higher forms of usage in terms of earning yield on those tokens, we see there's some good yield with the swap markets. And then a lot of people are wanting to earn yield on the lending and borrowing side, but it's not quite there yet. But that would turn on given higher market activity. But yeah, so probably to sum it up here, for a lot of the reasons I state, especially when it comes to the fees, good usage of the token across the board, I actually give Link in 8, which was similar to what I gave Ethereum. And I actually think there's a possibility of this actually going higher moving forward into, if we were to have a bull cycle here in 2024. The only thing I worry about with Chainlink, and I don't hear this enough, to be honest, is with the enterprise institutional side of Chainlink. A lot of people are pointing to those things as big positives, that Chainlink is getting adopted on a global scale with like Bank of International Settlements, Swift, BNY Mellon, and many others. But I have a hard time believing that these institutions will go ahead and accept payment or data from non-KYC'd individuals on the network. JP Morgan, for instance, back in the day was working with R3 and Corda. Then they went into the Ethereum Enterprise Alliance. Then they went ahead and took on Quorum, and now they're sitting on their own LINK, and I forget what they called the other system that they use, but they have their own permission network now, and they took all of their learnings from all those different projects and applied it to that. So I would actually almost fear that a lot of these institutions will take the learnings from Chainlink and somehow apply it and implement it on their own. But we ignore that when it comes to crypto-centric solution here for Chainlink and where it's sitting right now. And its tokens got great elasticity. It's got great usage across the board. And if we start to see activity start to uptick here, it's going to be a very positive flywheel for Link.
Okay. And this is before CCIP is rolled out, right? I mean, this seems like this is a massive promise that's on its way.
For me, it's assuming that CCIP just continues to roll out. It doesn't run into any massive hurdles, and it just kind of continues to find that product market fit across the board, and people start to use it. Because there's, in terms of alternatives, Chainlink is head and shoulders above the rest right now. So I can't imagine people would not be looking at CCIP and trying out everything it has to offer.
Okay. So some strong messaging there for Link coming on the monetary strategy side. Now we're going to get into what everyone's asking, which is price. How is the technical or the technology, and how is the monetary policy going to actually lead into what price we're going to see for the Link token? And we're actually going to take two different views on this today. for a couple different reasons. But JJ, I want to start off with you. Unpack it for us what price looks like. Again, we're expecting, the bear market has been brutal for any token, any token at all, but specifically alternative tokens. What are you seeing in the data?
Yeah, so our internal metric that we use to kind of measure price strength, variety of different moving averages. Currently, it's 6 out of 10 or so on there, coming down from being up near, I believe it was 8 out of 10 in September when it encroached upon like 850 or so. And now that momentum's kind of coming back. So that's typically some mean reversion playing out. You'd want to wait to see it get back above 7 or 8 out of 10 there to really show some short-term strength. On the daily chart, it looks like
Well,
it's just. Go ahead.
JJ, let me break in here with this chart. Just break it down a little bit more, unpack it a little bit more. When we say price strength for one day, what exactly is this chart telling us?
So what this does is it takes a bunch of different moving averages across different time frames, and when you look at one individually, it might not give you the full picture, but when you pair them together, it really shows the asset strength, right? So if you average what the price is over the course of weeks, months, and then you show it together there, we could see kind of the trend it's forming over time. So as you see, it's been pretty solidly green throughout 2023, which is showing that there's been some real buying there, right? We see some interest coming back into the market and thus momentum, which is kind of guiding price higher. Unfortunately, it can't break out of this range. So it's just kind of been in this long consolidation pattern for about the past year, floating between about $5 and $9 or so. And it's really kind of, this looks like time-based capitulation, where you have people that know you have a great asset, but how long will it take for this thing to break up and for you to actually earn money on your investment? And that's where kind of the patience of holding comes in.
Okay, that's a good breakdown. So what else do you have here?
So yeah, the same thing I see at the daily chart is what I also see on the weekly. It just looks like a very long, brutally slow consolidation pattern. But there is some encouraging signs in that we're seeing like increased volumes in this range. So that shows that there's some value here, right? Or at least people seem to be finding value there and anticipation of higher highs, possibly in 2024. We'll see. So I think once it does break out of this range, if it can get to the upside of 10, its ability to really multiply from there looks pretty strong. And I see the same thing when I look at it versus ETH. Is once again looks like a long consolidation pattern there. So if it can break out, I believe it's going to outperform ETH during the course of the next bull run, whenever that may be. It just, the waiting's the hardest part.
Waiting's hard. Okay, so to summarize here, we've had consolidation for a long time. From an ETH perspective, it looks like it could be ready to outperform once we see better liquidity conditions in the crypto markets.
That's exactly what it is people are all waiting for the risk on signal, right? And like Ben was mentioning with yields and stuff, it just, now isn't the time for DeFi when you can get 5% on treasury bills or whatever. So there's going to need to be that impulse back into the market. And then I think once there is, when and if there is, we'll see it really kind of shine.
I want to hand it over to Ray in a moment, but just a last point on that. How do you think people should be thinking about the time to which that could happen? I mean, that could be 9 months away, that could be 24 months away, it could be 6 months away. How do you think people should be thinking about that change and when that pivot may happen?
The way I kind of gauge it is I see, this is my mental model, is risk on is DXY below 100. Obviously, we're nowhere near that now, but if you kind of keep an eye on it and it looks like it begins to lose momentum over the next few months, that could possibly line up for DXY going sub 100 in 2024. And if you have that anticipation, you might as well start accumulating some of these bags now, and then you can obviously sell them at tremendous profit in the future if that ends up playing out. It's all kind of probabilities there, but that's the way I see it. And I
Right.
think when and if that risk on signal comes back on, these coins that have been beaten down and held into these long ranges, if they actually have these use cases as Ben and Cody outlined, which seems to be the case here with Link, strong fundamentals, I think we'll really see them rebound strong, and kind of the rotation back to blue chip altcoins the rally effect will be harder and faster than people currently anticipate.
Okay. Good mental model. All right, Ray, I want to bring you up here and talk price because I think your perspective is a little bit different. Why don't you walk us through some of the data you have and tell us if you're thinking kind of similarly to what JJ just shared.
Well, a positive is I'm not going to trash it and be all negative like I was with Matic or Polygon last week.
Okay, good.
um, I do agree with JJ that we're seeing a certain kind of element of time-based capitulation taking place where it's hard to go long and continue adding to an asset or asset class, which continues to see price constriction or downside, or when the overarching sentiment within the industry is negative or capital inflows pale in comparison to what they were during the bull market. So it's these times where you kind of like questioning your convictions and not sure if you're making a good investment or not. And it's hard to calculate if any of the roadmap promises will come true. But what we can see from Link is that it's missing a reagent to help it break out of its current 546-day range. But historically, an uptick in social volume and mainnet upgrades have preceded each price rally for this asset and for many other altcoins. So this is what we saw happening with the September rally, which saw Link tack on about 25% to its value. Looking at tweet volume, so we've got some data from the TIE, it's sentiment analysis data, and looking at tweet volume, which is the number of tweets posted about a coin in the last 24 hours.
Producers,
Yes.
oh, sorry, Ray. I think we have a different chart we want to bring up here. No, I don't think that one. I think it's the next one, maybe.
Yeah, the next one. So that chart's just showing Link's price performance over, 24 hours,
Mm.
um, 30 days, 90 days. So it's been an asymmetrical performer when compared against ETH, Bitcoin, depending on what your measurement is, and definitely other altcoins. It's been trending for a month. So the tweet volume, which is the number of tweets posted about a coin in the last 24 hours, it surged by 427% in September. And alongside that, the number of unique accounts tweeting about Link or Chainlink also surged by 70% just in the last 24 hours. So if you got onto Twitter and you put in, the ticker $Link or Chainlink itself, you're going to get a lot of newly generated tweets and retweets and social chatter about the ecosystem and about the asset. And the takeaway here really is that despite fundamentals, social sentiment gauges, if we look over a 1 month time period, a 3 month time period, a 6 month time period, they appear to be a fast moving indicator that sometimes precede price and sometimes like a surge or a breakdown and social sentiment or tweet volume or even doing a keyword search can be aligned with price moves. So I think for traders that are using a momentum strategy, it's just another tool that you can add to the repertoire. And like mentioned earlier by JJ and Cody and Ben also, Chainlink has been rolling out a bunch of stuff, hitting the conference circuit pretty heavy. And these actions are aligned with the price move. So simple sentiment data analysis can kind of put a marker on when this trend is nearing exhaustion.
Okay, but we're not there yet, are we?
I don't think so. And do you want me to say a little bit more?
Well, yeah, just maybe put a point on that one, and then we can come back and get everyone's views on whether or not it's going to be a beta play.
So I think ultimately macro's playing the dominant role in Link's longer term price action. As JJ says, price needs to break through that kind of zone and then it should go, or one hopes it goes parabolic. So despite this kind of medium term asymmetrical performance that we're seeing Link show against the wider crypto market, and I do recognize that there's upside potential and that Chainlink is endemic to the entire crypto ecosystem, and they're making footsteps into the real world economy and traditional finance. I think, macro headwinds, whether it be they're crypto specific or coming from, traditional finance or even geopolitical concerns, that's the big thing that's kind of holding Link back from showing its true value. So I would say I agree with Ben and JJ that the asset, just based on fundamental analysis and its kind of growth trajectory, I think it's undervalued right now.
Okay. Well, that leads in perfectly to actually answer the question, which I really want to know: is buying Link right now similar to buying Ethereum when it's like $9? Is it going to be the beta play that outperforms and everyone's going to wish they'd bought in? So I'm going to go around the room and I want to hear: is it a beta play? Is Link a beta play to Ethereum? Cody, I want to start with you. Is it the beta play?
If it delivers on CCIP, it might be, but it definitely isn't like buying Ethereum at $9. Like that's a trade of a lifetime. I don't think Link will be, even if it delivers.
Okay. Ben?
I think it's a beta play.
All right. 2 for 2. JJ?
Strong beta play. I do think it'll outperform ETH in the next bull market, but I don't know if it'll ever be trading in the thousands like ETH. So beta play, but shorter time horizon there, I would say.
Okay. Ray?
I think it's a beta play. I don't see its price outpacing Ethereum's, but a percentage-wise measured move. Link topped out at like 55 or 56 all-time high. Right now it's trading where? It's trading for like $7.24. So if we get a bull market, if we get a crypto regulatory framework, which makes it easier for all of these great projects that are out there to actually build things and not worry about, bullseye being on the back of their head, I do think it is a beta play. Also, just map out a Link and Ethereum chart together on a daily time frame, and the assets move in tandem. So if you're a believer in Ethereum, and there's many good reasons to be bullish on Ethereum long term, given Chainlink's endemic nature, it's like as endemic to crypto as Ethereum is itself. I think there's a strong case for saying if ETH is up, Link is going to be up, and it's one of the strongest projects within the crypto market, despite what its current price shows.
Okay. Well, there you have it. This is, I think, the first unanimous beta play that we've had on this show, and obviously with their varying versions of that with price. But if you like this and enjoy this, I know it's a lot of in-depth of analysis, but you're able to see the charts. You're able to see how the team is walking through their thinking here. Check out the previous versions. The last 4 or 5 episodes, we've done these for other tokens, including Cosmos and Avalanche and several others. We're going to continue to build this out. But this is definitely a place to go to if you're thinking about investing in a token and getting into something long-term. Guys, thank you. Now we're going to move on to our next segment, which I always enjoy. We're going to bring up Cody, and we're going to do it like it or spike it. Cody, are you ready? You excited?
Yeah, let's do it.
All right. I love it. Okay. Very first one here. You got some spicy ones today. Lido dominance within liquid staking prompts warnings by relevant members of ETH community. Like it or spike it?
Spike it.
Oh, taking that one down. All right. Unpack what that means for us.
Okay, so let's see numbers for Lido, please. I think it will be easier if we see them on screen.
Pull up the data, producers.
Yeah, but long story short, Lido is a protocol that is used for liquid staking. As you'll know, you stake your ETH if you want to secure the network, get some sweet APR. Lido allows you to do that and get as liquid staking token return, staked ETH, to use in DeFi. What's the issue? Well, the issue is that out of all staked ETH, 32% is staked through Lido. And right now, that's like almost 23% of the Ethereum supply, or 27 million. So I'd say a third of 22, what's that, like 7 point something percent of all Ethereum is sitting on Lido. And the worry by some of the community in Ethereum, by some of the members of the community in Ethereum, is that Lido could attack Ethereum itself. If you have 33%, if you have like 0.5% of Ethereum, you could attack the network. If you have 67% or like if you have 50% of the stake, sorry, you could attack the network. If you have 2/3, you could fully hold the Ethereum chain. And not just that, but also Lido could attack, let's say, the users that have stake Lido with them. So instead of attacking the network as a whole, they could change the smart contracts of Lido and mint more stake teeth than they have sitting with them, and rendering stake teeth valueless, or they could attack the protocol in some other ways maliciously to get themselves the ETH that is staked with them. So let's look at these possible scenarios. The first one doesn't really make sense. It would be really what's the name? It would be really expensive for Lido to attack the network, and they would not succeed. Like that's even if they manage to hold the network, the Ethereum network could fork as it did during the DAO attack, and that attack will be rendered useless. The same goes for like trying to hold the network or like trying to get MEV rewards for them. It's just the risk reward is just not there. What they could do, or like what would make more sense for them to do is, as I said, attack or upgrade the contracts to profit themselves based on the ETH that they have from other users. That also doesn't really make that much sense right now. They are the most successful DeFi protocol. They are making money hand over fist. It doesn't really make sense for them to sabotage themselves in that way.
Yeah, I was going to say, it sounds like that attack would be killing the golden goose.
Yeah, exactly. That's exactly what it is. But regardless, there's some misgivings, and like I do understand them. I think the core of the issue is that when you give Ethereum to Lido, they controlled your ETH, and you cannot really participate in the network. They effectively have control over it. So Lido holders have control over all stake ETH that is with them. So there's a proposition to implement dual governance on Lido. So Lido holders would still be able to like vote on governance propositions or whatnot, and like influence the future of the Lido protocol. But holders of staked ETH with Lido would have veto powers. So if something that is trying to pass they don't agree with, they could vote, they could, as I said, veto it. And that is in the works. I think it's still like a few months out, but I think that would be a resolution that works for everyone. What I do not like is that some of these misgivings have been used by members of the ETH community and members that are members of other liquid staking protocols to try and attack Lido. And they call, or their position is that Lido is, in a sense, not representing the core values of the Ethereum network, and that we should uphold the values of the Ethereum network through some kind of mob rule, and that Lido itself is something, and liquid staking in general sense, is something that should not really exist. Like the Ethereum didn't intend for liquid staking to exist, and that to me is just. What's that?
I was going to say, isn't that part of what we have with these open systems, these censorship resistant systems? People are allowed to build and do what they want to do.
Exactly. So either you implement that at the protocol level, you make it so that is not a possibility, or you cannot just call foul because it doesn't really sit well with you. That's one thing. The other thing is that even if the Ethereum didn't want this kind of delegated proof of stake system that most of the other proof of stake systems implement, it emerged in the end because that's what makes more sense for users, because most users don't really want to have to run a node. They don't want to stake themselves. They want to be able to get that yield and like secure the network, but they are not technically proficient enough to do so. They don't have the time. They don't have the capabilities to do so. You face slashing if you don't uphold your node all the time. There's a whole lot of bad things that can happen to you if you want to run a node by yourself, right? So in my mind, it was always going to be this way, and if you bar liquid staking, you also would leave the gates open for centralized exchanges to become the place where most ETH sits, right? Right now, after Lido, it's already Coinbase that has like 14% of staked ETH. Then there's Figment, which is like a staking provider, but the fourth as well, it's Binance, which is 4%. If Lido were to disappear, Coinbase, Binance, probably other centralized exchanges would manage to hold even more higher percentage of the staked ETH, which would be an even more solution.
Right. Okay. So I'm gonna summarize this one so we can get to a few more of these other ones. But it sounds like it's not necessarily a good proposal. It really goes against some of the ethos, actually, as you're saying, in small rule about how they should be managing liquid staking. And then, of course, you have the other issue is that you address liquid staking coming from Lido and perhaps send all that traffic into centralized exchanges, which again goes against the ethos of Ethereum. So not a great solution to a perceived problem.
It's a lot of hand wringing, and it's not really a good solution. I think that the good solution is being proposed by the Lido team members, which is this dual governance, and I think that's going to pass in the coming months. Aside from that, I don't think that's much to see in the story.
Okay. All right. Well, I guess we'll continue to see how the community reacts and what is actually proposed to move forward. All right, let's move on to the next one. This one's a little frustrating. SocialFi project Stars Arena suffers 2 consecutive exploits, leaving smart contracts with just, if I'm reading this right, 5 cents. Like it or spike it?
Spike it.
Oh man, that's just depressing. I always hate hearing about these, but we got to talk about them. So unpack this one for everyone who's not familiar with it.
Okay, so Stars Arena is basically a Frente clone. It allows people to connect their Twitter profile and buy shares or like tokenized tokens that represent the people that are connected through their Twitter to this Stars Arena. And it gives the token owners access to content and other perks that the original creators want to give. So say, I don't know, I buy a token of Ben Lilly and Ben Lilly wants to give me some alpha. Me having shares of Ben Lilly gives me access to that, to private messages or to a feed if they have it. And that was one thing that Stars Arena, for some people, improved on for like compared to Frentech, is that they had a feed similar to Twitter does. In any case, it was very successful, at least in the beginning. It grew, or like it carried a surge in activity in Avalanche and a bunch of other things. But like as you said, it had 2 exploits consecutively. The first one wasn't as bad. I think they only got away with $2,000. The second one was the worst one, and it came just after they posted this on Twitter. This exploit has been fixed. Don't get this wrong. We are at war. I think if anyone that had fans on Stars Arena saw this, they should have run for the doors because this doesn't seem like something someone that is like level-headed would write. But yeah, shortly after they posted this, they got attacked again, and this time the attackers left with almost 3 million. They had like 266,000 AVAX, and now they have, as you say, like 0.0 something, so like 5 cents total. But yeah, as I said, it was quite successful in the beginning. The TVL rose from 0 to like almost 3 million in like 10 days. There was a surge in Avalanche as a whole, which was seeing like 150k transactions a day up to like 500k transactions. It went from 30k users a day to 45k users a day, and that this was reflected in the Avalanche price. I think if we pass on the next image, we'll see Avalanche has been on a downtrend since forever. This year, I think the top was in January 2023, and it went on down to like $8 or something. And just after Stars Arena was launched, people got excited about Avalanche again. It rose up to 12 and literally the day that Stars Arena was exploited for the second time marked the top, and it's been on a downtrend ever since.
We got to get some new programmers here to fix these holes. And what's your perspective? Just a couple seconds there. I mean, is better auditing, better tooling for developers? I mean,
Well,
what help us get past these series of exploits we always hear about?
yeah, we need all of that, but in this case, the project itself was sketched from the beginning. The Frentech code is it like 100 lines. It's verified. That means you can go on Etherscan and look at the code that actually runs the protocol on chain, and everyone can look at the different functions that are being called at all times and can verify themselves that everything is as it should be, and there's no hidden bugs or anything, right? The guys at Stars Arena didn't verify their contract. The contract that they took, they changed Frentech code quite a bit. They added a bunch of things, and again, they didn't verify it on Etherscan. So you cannot just go and see what is been running at any point in time. So there could be some hidden functions that are not that are malicious, and we would not be able to see that. So it's probably a case of a bit of malicious intent by the devs. At least it looks really bad. So
Yeah.
I would say in the future, especially when it comes to clones of successful projects, if the project itself is not verified on Etherscan, you shouldn't really trust it, to be honest.
Okay. There you go. There's your heuristic to try and avoid getting scammed out of projects like this. All right, let's move on to the last one we have for today. Hopefully, a little bit brighter, bring a little sunshine. SocialFi emerges as a new crypto trend. Like it or spike it.
Like it.
All right, I hear the angels screaming down at me from the heavens with a little bit of sunshine. Unpack this one, why this is good, and walk through some of the data. You got some interesting data points.
Yeah, and I know that some people, including me, maybe don't favor social finance as much compared to other DeFi uh, avenues or other DeFi sectors, but you cannot. You can't say that this isn't a successful new avenue. Let's say everyone was hoping for something new and different to come into the scene, and this is it. And you can either participate in it or you can just pass it by and I don't know, close your eyes and bury your head in the sand. But yeah, it's ever since the appearance of Frentech, the whole social fi sector has been quite successful. I think the TVL for all project right now, it's around 45 million. Before Stars Arena was hacked, it was closer to 48, almost to 50. But yeah, there's not much TVL in there anymore. But yeah, Frentech was the first one. It's running on base. It's still probably the most successful, but there's now Frentech clones. Some of them changing some things, others not so much. But yeah, adding some. Most of them do add some changes. They add some NFT capabilities. They add the feed, so Twitter does, and we have a bunch of them. We have them on Arbitrum, BSC, Solana, Avalanche, Polygon, Mantle. And Frentech is still as I said, the most dominant one, but
I was
it's
going to say,
losing some
looking at
ground.
the numbers here, it's conquering everyone by a large margin. There isn't anything really else on the
By TVL, yes, but if you look at the other metrics like transactions and
yeah,
fees
let's look
and
at those.
yeah, so if you look at fees, yes, Frentech, I think it's the maybe second or third, but there's I think it's no StarShares. StarShares. I don't know why it says StarShares. I think it should be Stars Arena. That would be the Avalanche one. It had a lot of transactions. It was really popular. I think a lot of people on Twitter were really into it because apparently this is what's the name? The experience was really good, but also it had a lot of activity. I saw some screenshots and some people that posted on Twitter were getting more likes on Stars Arena that they didn't get on Twitter, which is quite incredible. Yeah.
I was going to say, there's one last chart here. What is this telling us?
Yeah, that would be the number of active users. So as we said, like Frentech is still the first one, but there's quite a few that are also up there. Like there's Postec, I think, was the one on Arbitrum. I think it's just a clone of Frentech, but it saw quite a bit of success. There's a couple of others that are quite successful. I don't know if they are represented here, but they are sitting on Solana. They do have a lot of transactions, probably not as many users. Yeah, Hub3, one I can see it now. And another one that is even newer, Cypher. Yeah, Cypher on the last day you see that yellow. That is, yeah, that has like 25% maybe of all users of the last day. And I don't think we have it now, but it has like 50 or 60% of transactions over the last day. And this is, yeah, Cypher is sitting on Solana, another Frentech clone. I'm not sure if that's much. Hub3 does that a bit. And there's another one with NFT capabilities on Solana that is not represented here, but it also changes some things from Frentech and has seen quite a bit of success.
Okay. So overall, we're seeing a lot of adoption, a lot of people experimenting with it. Seems like an exciting place to be. So this is
Yeah,
the new app. How long do you think this narrative is going to last? Huh.
I think we need to see some more experimentation. I think when like Stars right now got everyone really excited. I think quite a few people are going to be down, but yeah, hopefully we forget about this. We find another protocol that is more trustworthy, and people start using it. It's also been quite what's the name? It's also bringing in the bugs to these protocols. I think the monthly fees um, for social fi as a whole is sitting at 16 million plus. So yeah, it's quite a bit of money. So there's if you're a protocol dev, I think this might be an interesting place to start working on.
Okay. All right. Well, I'm gonna start buying up people. Maybe I'll buy up some Ben Lilly. All right. Well, thank you, Cody, for those three. I'm glad we ended on a high note. All right. With that, we're gonna move on to our final segment for today, talking about what we dare not talk about, which is Sam Bankman-Fried artwork courtesy of our AI intern who likes to experiment. Here you can see working with a little bit of Scotch tape to put SBF on what can only be assumed is a question about Ponzi schemes. So, guys, I want to ask the question as SBF is now in trial. I think we've all seen some headlines. I've attempted not to be reading it as much as possible because it makes me so sad. But I want to ask, was SBF operating the biggest Ponzi scheme in history? What do you guys think? JJ, I want to start with you.
I think without doubt, if you believe kind of the story or the narrative that they're trying to put out there now, I think you just need your head examined. The guy was pretty like there was always something off. You could see in the interviews and things going back to late 2020, early 2021. There's always something that seemed disingenuous about him. I don't think it was ever necessarily a legitimate business, rather just kind of a cover for the scheme that ultimately unraveled last year.
Yeah, it was pretty gnarly that way. Ben, I want to bring you in. What are your thoughts on this being the biggest Ponzi in history?
Yeah, I believe so. And when we see some of the folks on crypto Twitter talking about, you know what, maybe this was bad accounting. Maybe this had to do because it was a startup, and startups, it's hard to keep track of finances because you never know really like where the revenue stream is going to kind of grow the most from. But when it comes down to it, like, was he trying to make it right? Is there any indication that he was like, you know what? I want to straighten everything up. I want to make this legitimate. I want to button it up. I haven't seen it. Maybe I'm wrong here, but I don't see any indication there. And for that reason, like, yeah, I think it's probably the biggest Ponzi scheme. But I would also add in, like, there should be this discussion about regulators helping create the biggest Ponzi scheme to date. And perhaps, you know what?
Oh,
Maybe it's
Absolutely.
not SBF here, but the regulators here.
I think you just called out the person in the room that isn't in the room that needs to be in the room.
No.
Just putting it out there. Cody, what are your thoughts? Is this the biggest Ponzi scheme in history?
Well, I'm gonna nitpick here. The biggest Ponzi scheme was Bernie Madoff's. I think the size of the fraud here there was like plus 60 billion, something like that. And in this case, I don't think this is even a Ponzi scheme. Like a Ponzi scheme is like quite elaborate, right? Like you're promising future investors like you're giving returns to future investors based on what past investors have given you. In this case, it's just like a guy just seeing some money to his side and being like, yeah, why shouldn't I take that? It's just a pure case of embezzlement. In my mind, it's like it's
Oh,
simple, right? Like
I think
I love the nitpicking
Alameda
on the
was technically
terminology.
promising returns, weren't they? Like that sheet that went around in terms of what they
that
were
was,
saying.
yeah, but that was
People-
only in the beginning, right? Like for them to get some capital. I think that the big like fraud here is the embezzlement of customer funds.
Yeah.
And that was that was what they got all the billions. I guess they committed fraud against lenders and whatnot, but I don't know if that also would qualify as a Ponzi scheme.
Okay.
We
We got one person who's making sure we're using language in a very specific way. I appreciate that, Cody. Way to, we do need to be specific with Sam Bankman-Fried and make sure we get him for the right offenses. Ray, I want to bring you in here. Are you in agreement with Cody that it was perhaps fraud, but not quite a Ponzi, or are you thinking something else?
Yeah, I'm going to kind of agree with Cody and say that it wasn't a straight up in your face pyramid scheme / Ponzi scheme, but it was definitely fraudulent on many levels. I don't know that SBF intended to have this with the exchange and with FTX and all that. To me, it looks like a
You mean he
case
didn't?
of his effective. Oh, go ahead.
I was going to say, you don't think his intent was to end up in jail?
Probably not, but also I don't know that he intended to, create this fake bull market and blow up the entire crypto market and nearly destroy it. I think it's possibly a case of effective altruism gone wrong,
Mm.
combined with the drug use, the little methamphetamine packs or whatever it is, antidepressants and stuff that he and some of his colleagues were using. So the darker element of this is all the political contributions to all these different politicians. And I think that's all a component of his effective altruism, where it seemed like he was intent on controlling the system, altering the system, or destroying the system in order to create some sort of greater good for the entire world. And that's where it all gets kind of twisted and doesn't make sense. So I don't think it's a Ponzi scheme by definition, textbook definition, but fraud was definitely used throughout the entire enterprise and throughout the entire lifespan of FTX. I
Okay.
think he deserves life in prison, and I
Sure.
hope that's what he gets.
Well, let's see the fraud charges come up. Yes. Okay. So we've got 2 for a Ponzi, 2 for other types of fraud, and 4 all agreeing that this was one of the biggest frauds, financial crimes in history. Maybe Cody's saying, well, it's not quite as big, but it's still big enough. So let us know what you think. Did he commit a Ponzi? Did he have other fraud? And what do you think the punishment should be for Mr. SBF? As many people lost, gosh knows how much money, and hopefully not more than that. But with that, we are going to wrap up today's show. Okay, this was a big one. This was our 21st show, and this was our first video show. I want to thank the guys for being here. We got Ben, we got Cody, JJ, and Ray. Interesting show as always in terms of the markets. We don't know where we're going. That's why we're here every single week monitoring them, trying to give you as much information as we can so you can prepare yourself and think about your portfolio, whether you want to add Link today, whether you want to be doing it in 6 months, or maybe it's not something you want to touch because you're going to keep your money in Ethereum or Bitcoin. That's up to you. We're just trying to give you some insights. And with that, we're going to wrap up this week's show. I'm going to do what I do every week and say, come back here next week. Listen to what these guys have to say, because I know it's going to be something that you can think about and apply to your own portfolio. And just be sure to be safe out there and make sure, please, you got some dry powder, because new opportunities will come down the pipe. I'm sure of it. All right. So that's it for this week. This is Marconi White signing off.